Folks, you better buckle up and get ready because in today's video, we're going to break down the latest on the market and plays. And then we're going to go on to 3 stocks that have crazy potential in November 2025. Each of these stocks has a beautiful business model, a huge proof of concept, a ton of massive tailwinds backing them up. I'll make the case for each of these as well as the risks and let you be the judge. And I'm going to put all the timestamps down below. But as always, if you're the one taking the ultimate risk, make sure that you're the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Also, last call, our 25% off sale on Discord membership will be ending tomorrow night. Our Halloween sale is officially coming to a close. This is the last and final call. There will be no more extensions. We've got a crazy week coming up with a lot of earnings reports and a lot of catalysts, and so you're not going to want to miss our day-by-day briefings. And I'm going to be posting a lot of key prep, predictions, and alerts, so this is a great time to join. And so if you do want to join us, make sure to click that link down below before tomorrow night. Okay, so let's start with market context here. So we just had October. Are we heading for an up November? Well, let's look at the historical data. So November, on average, has been the strongest month for the last 10 years, and when adjusting for 20 years, it's the second strongest month historically. Now, what about years like this year that we've just had, where the S&P 500 has already returned more than 15% year to date by the end of October? Well, in those situations, November tends to average up 2.7%, and the median is up 2.5%, with markets ending higher 81% of the time. And then when you look at December, it tends to be slightly worse than that, but you're still averaging at 2% up, and the median at 2.1% up, with a win ratio of 71.4%. What about the overall odds of a year-end rally net? When you're looking at the whole bigger picture, November and December, you add in some volatility and so forth. What does the data say tends to happen in this kind of situation? Well, if you look at the historical data for the years where the S&P 500 is up like we are this year, well, the last 2 months of those years were actually ending green 95.2% of the time. The only exception was 1986, and even that wasn't much of a drop. Now, that doesn't mean that this year might not be the exception, but I think that if you're a bear, you have a lot that's going against you. Reasons why we believe the year end might be higher, well, historical data, CapEx is heating up massively, more rate cuts coming next year. Maybe we're going to get one in December. Who knows? The next Fed chair is coming in May, which is going to be very, very dovish. Whoever Trump's going to pick for this next term is going to be an even crazier money printer. The USD is melting and the stock market is denominated in the USD. And then you just got a major US trade deal with China finalized. Now, what are some reasons why year end could be lower? Well, you could get a sudden Trump trade policy shift, which that tends to happen a few times every couple of months. You could get Powell signaling a change in policy, which is probably unlikely. He's already kind of dampened on the December cut, and that really hasn't done that much to spook markets. And then you could see tax loss harvesting, which usually has quite the minimal impact. And then maybe you get some sort of unforeseen black swan that is impossible to predict. But overall, bigger picture, it looks like very clearly the bears have a lot they're fighting against right now. There's a famous quote that says, "Don't fight the Fed." Well, right now the bears are actually fighting the Fed, the US dollar, the White House, trade policy drama de-escalating, unprecedented levels of CapEx, and 50 plus years of market data. Now, what's the practical takeaway? Is it that you should go all guns blaring into every stock because a crash can never come? Of course not. The practical takeaway is always be a cautious bull, understanding that long-term great assets at great prices are going to do very, very well. But at certain points, you're going to have periods of time where those actually become very discounted, sometimes crazy discounted, which allow you to buy in at even better deals. But those periods shouldn't derail your overall plan and your overall long-term growth trajectory. Step 1, own great assets that you actually have conviction in, buy steady over time, dollar cost averaging, and relax. All I'm saying, buy good assets over time and chill the hell out. If you're somebody that's finding yourself freaking out on every level of volatility, this is the strategy that you should be focused on. I think 99% of people, if they focus on this first, they're going to be building a great foundation long term. And if they want, they can add in momentum trading, they can add in squeeze trading, spec trading, and so on and so forth, which does require higher levels of skill when it comes to risk management. Okay, we got to talk about the trade deal front. So China and the US finally signed a major trade deal on November 1st. Now, if you remember fund manager and media expert rhetoric in April at tariff crash lows, you could see how far we've come. Back in April, when we were screaming buy, 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 a lot of fund managers and experts yelled that we were going to see the complete decoupling of trade globally and that was going to permanently derail the stock market. They said buying the dip would put you on the street, leave you bankrupt. The media parroted this mindset for very, very long periods of time. And sadly, many people sold out of their 401ks with massive penalties. They locked in huge losses. They permanently left the market, and it was all because of this very aggressive financial media fear-mongering. And anyways, now it's November, and not only have markets rebounded and built well onto all-time highs, but now we've got the major US-China trade policy war behind us. So what are the benefits of this deal from a stock market standpoint? Well, for starters, this should create an even bigger risk-on sentiment boost, which could mean a much broader market rally, not just the big tech names rallying, but a lot of the companies and different sectors that were destroyed by tariff uncertainty. Well, a lot of them might come back soon. By halting new tariffs and easing export tensions, the deal reduces geopolitical risk premiums. That means trade-weary capital might be set to rotate back into cyclicals and growth as trade war tail risk fades. Expect net relief rallies in indices like the S&P 500, the NASDAQ, and the Dow Industrials. Volatility VIX often compresses after such truces, fueling short-term risk-on momentum. There's also the supply chain relief, which is going to cause a lot of relief for manufacturing, tech, and EV stocks, quite crucial for semiconductor plays like NVIDIA, AMD, SMCI, and Intel, EV and battery producers, industrial machinery plays. You're also going to see an agricultural and commodity rebound trade. This is going to mean energy and AG agricultural plays are going to rise, and energy names are going to benefit indirectly from improved global trade flows and freight demand. The more you see trade around the world, more energy demanded, and the more energy prices go up, and the more these energy names, especially the efficient ones, see inflows. Number 4, you're going to see confidence and liquidity surge, even higher than it is today, which is going to result in even higher corporate investment. Reduced uncertainty historically has always encouraged corporate CapEx and buybacks to increase, and it's also improved earnings visibility quite a lot. This is going to be especially supportive for AI infrastructure, industrial, and shipping logistics names, and global investors are going to see U.S. markets as a much safer and open destination, strengthening dollar inflows, which is a good reversal. And so overall, I mean, what you're going to see is market psychology flip from decoupling fear to stabilization relief, which is going to be very important for specifically the companies that were left behind by the big tech rally this year. Much of the non-tech S&P 500, which is underperformed, and I think that this news is going to help broaden out the big bull market rally we've had quite a lot, which could lift a lot of names out there. Okay, let's move on to rare earths. So the thesis for rare earth stocks, specifically domestic ones here in the United States, is that, look, China controls 85 to 95% of global rare earth supply and some 80% for the US specifically, and this leaves US and allies cornered if China decides to pull the plug. Rare earths are essential, absolutely essential for data centers, battery, defense systems, aerospace systems, consumer electronics, medical imaging and equipment, satellites, basically the majority of electronic technology. And this makes rare earths a matter of national security. There are no shortage of freaky looking graphics that depict how scary our dependence on China for this is. And unless this is countered, well, long term, the US will be at a significant disadvantage. The Trump admin has tried to counter this by taking stakes, financing, and or otherwise backing domestic rare earth suppliers. Now, popular rare earth stocks with government backing and or suspected future government backing include MP Materials, MP, Lithium, America's LAC, US Rare Earths, USAR, American Battery Technology, ABAT, and many more. But these are all on a pushback from all-time highs. Why? China recently restricted rare earth exports, which caused massive spikes in these stocks. Then China and the US de-escalated, and of course, most recently on November 1st, the US and China made that deal that suspended these restrictions, and that was for the timeline of 1 year. That said, the long-term thesis here is very much unchanged. Long-term, the thesis is unchanged. Government has taken significant effort to support domestic companies and has made reshoring away from China a key component of its goals. If China can suspend rare earths on a whim, the US does not have national security in the segment, and that's why I believe that the administration's push to support domestic rare earths is only beginning. If China can play around with our national security, that reaffirms the goal of really booming out the domestic industry here. So overall, I would say, look, the counter-China trade is alive and well, and rare earths is going to remain a key battlefield for the coming years. So speaking of the counter-China trade, let's talk nuclear. Few people are realizing that energy production and the ability to produce energy cheap is one of the core fronts of the overall AI arms race. And with electricity costs skyrocketing, this is going to become a bigger and a bigger issue. And one of the main ways to solve this is with nuclear energy. You look at the number of nuclear reactors under construction right now, China is far ahead of everyone else. 29 nuclear reactors. And so the Trump admin has been pouring focus into countering this. Quote, Trump administration backs plan for new nuclear plants. And we've been talking about this for a while and named a few ideas in the space. Now, one of those core ideas in this segment was the SPAC called HOND. We explained that they were going to be merging with terrestrial energy equity, and it was one of the main publicly traded ways to get in on the new DOE Department of Energy program. And my prediction was that you'd see an anticipatory run before the merger and then a take profit period right before and after the merger, as has been the case with SPACs historically. And then long term, you'd see an adjustment to its true value, which I believe is going to be much higher. Now, anyways, they merged and it's now IMSR on the NASDAQ. The overall titles haven't changed yet. It's probably going to take a couple market days for them to change. But if you look at the overall chart, that's basically what happened. What we predicted is what happened. It was trading at just under $14 when we called out HUND, and then it ran to $27, and then now it's back down to $17 post-merger. So where will it bottom for long-term growth? Well, I'd argue around $14 to $15 a share based on previous patterns before a longer-term uptrend that takes it back into the 20s and then the 30s in the bull case for 2026. If you're in the Discord, we're going to continue to update you on this, and there's going to be new calls alerted probably sometime this week once the stock steadies out a bit. Okay, next, let's move on to our new picks for November 2025. So we got to start with number 3, Fermi Inc., FRMI. So what is Fermi? Well, Fermi is essentially an AI-focused infrastructure real estate trust with a bold plan to build massive data center campuses powered by on-site energy generation, natural gas, solar, batteries, and most importantly, next-gen nuclear. The company's powered shell lease model lets hyperscaler tenants plug directly into dedicated power capacity, a crucial edge as AI workloads push global energy demand through the roof, as we've been talking about. It's a high potential business. I mean, you got a promising model, you got massive market tailwinds, but there's also a lot of execution, financing, and regulatory hurdles in this space. So why does this stock stand out to me? Well, for starters, it has a connection to the president. Rick Perry is co-founder and director of FRMI, and if you recall, Rick Perry was the energy secretary in Trump's first term. He's also a former governor of Texas, and he has a very famous name in Republican politics, and he's using this experience, and I think his name, to build out a colossal nuclear campus in Texas. Now, as the former U.S. Secretary of Energy and a former governor of Texas, Perry is likely quite familiar with all of the layers of red tape and likely has a ton of relationships that can help expedite the regulatory process here, which is the main hassle. And moreover, get this, guess who they are naming their massive Texas campus after? Well, none other than President Trump. Cringy? Sure, but that's the way this game works. A lot of companies played the same game during the Biden administration, trying to push the ESG policies and some other policies. A lot of people think that corporations are naturally one party or the other, but really the corporation's main political party is the political party of money, which means they're going to follow wherever the money is. And it looks to me like this company's being built from the ground up with the understanding of how to play the game to get the massive moonshot government deals. If you're reading the tea leaves, I mean, there's a lot of nuclear plays out there that could have got government funding, but quite frankly, I mean, they're kind of run by people that are still playing by the old books. They're trying to advertise themselves as climate change plays when they really should be advertising themselves as energy security, national security plays. Again, they do the same thing, but how you advertise makes your politics very, very well known, and that's why you're seeing a lot of these companies start pivoting very, very aggressively to catering to the Trump administration. And also, this type of company specifically looks like it's being built from the ground up, catering to the Trump administration and the national priorities of the Trump administration, which I think is going to help them a lot to build in the space the next few years. Okay, so what's the overall case for Fermi? The AI boom, as you know, it's not just about chips, it's about electricity and space. Every new LLM or training cluster needs megawatts of stable power, and Fermi is directly targeting that bottleneck. Its Texas campus aims to deliver up to 11 gigawatts of capacity, long-term enough to power some of the largest AI operations on Earth. It's got strategic leadership and Trump ties. Of course, like we've just said, co-founded by Rick Perry, former U.S. Energy Secretary under President Trump, a major credibility and access advantage for permits and partnerships exists. The planned Donald J. Trump generating plant isn't just a name, it's branding that, quite frankly, panders for political support and media visibility in a pro-energy, pro-infrastructure environment, specifically in regards to reshoring energy independence. It's got first mover scale and REIT structure. So Fermi is trying to do something no other REIT is doing, and that's vertically integrating real estate, power generation, and data center leasing into a single platform. The REIT structure could make it a future dividend powerhouse if projects reach cash flow status. Think digital infrastructure meets utility yield service. Institutional investors piled in at IPO around $21 per share, which is a strong vote of confidence for a pre-revenue company. And right now it's not trading much higher higher than that, which is great. And then there's also the clear macro relevance with the US and China tech rivalry and rare earth truce easing, temporarily at least. Domestic AI power capacity is going to become a national priority, and Fermi's US-based energy independent design aligns perfectly with America First energy policy and the push to onshore critical infrastructure. Anyways, this is what we sent out to Discord members on Fermi this past Thursday. Quote, Fermi signed 2 additional nuclear agreements tied to its planned Amarillo, Texas data center campus, aiming to start production of long lead equipment for 4 Westinghouse AP1000 reactors. And then we sent this out today. FRMI is a unique setup to the data center / nuclear / alt space with a close connection to the president through his former energy secretary, Rick Perry. As we pointed out here Thursday, this is going to continue to be a relevant stock with upside potential for the coming quarters and years. Okay, next, number 2, TSMC, Taiwan Semiconductor, trading as TSM. So TSMC is the world's largest chip foundry by revenue. Almost every big tech company is a client of Taiwan Semiconductor. If you're talking about Nvidia, AMD, Broadcom, Apple, you name it, it's a customer. Now, we have been calling this out since way lower prices, both on YouTube, but also many times in the Discord. It is also a core portfolio pick in the Discord if you're somebody who does look at our model portfolios. But I continue to believe that this is a buy and hold slowly over time type of pick. We love it long term, even though it's up at way over all-time highs, we love it. And quite frankly, the numbers back us up. The overall breakdown here is, yes, this is the world's largest chip foundry. The customers, as the customers scale, and these customers are scaling pretty rapidly if you look at recent earnings reports and the earnings coming this week. Well, as those companies scale, it's inevitable that you see TSMC scale as well because, again, they're all contracting together. And then there's the AI boom fuel. Every AI chip from NVIDIA's H100 to Apple's M series depends on TSMC's advanced nodes. They're the invisible backbone of the AI arms race and set to skyrocket. Number 3, record growth. Latest earnings showed revenue up over 40% year over year and profits hitting all-time highs as AI and high-performance computing demand continues to explode. And I believe that CapEx is going to explode even more into 2026, which means that TSMC should explode too. Global expansion, building new fabs in Arizona, Japan, and Germany reduces geopolitical risks and secures billions in subsidies from friendly governments. And I think that this new China trade deal is actually going to help de-risk a lot of the fear away from Taiwan and an impending invasion. And then you have the massive competitive moat, decades of R&D, process leadership at 3 nanometer and below, and trust from top clients make it nearly impossible for rivals to catch up in this space. Number 6, valuation. It's still reasonable. Despite its dominance, TSMC trades at a lower multiple than many US peers like Nvidia or AMD, giving long-term investors room for upside in the overall AI arms race supply chain. And then quite frankly, the overall bull case, this is a picks and shovels play on the entire tech revolution as AI, EVs, and data centers scale worldwide. TSMC is quietly profiting behind the scenes, and this is something that you got to keep in mind, and this is why we have been very, very big believers in the stock for a long time and continue to be. Now, finally, number 1, AMAT stock. So I believe that AMAT is very quickly heading for a breakout of its all-time highs and will build substantially above that. And look, it's failed many times before, but right now you have some of the strongest growth we've seen and some of the strongest momentum, and that's backed by, again, the numbers behind the scene. Applied Materials is one of the most critical companies behind the chip manufacturing process itself. While TSMC helps make chips, AMAT actually builds the tools that make TSMC itself possible. Look, we've called this stock out here before on this channel a number of times. We even broke down how members of Congress were buying shares in the stock back in 2024, and we alerted call options in the Discord as late as this summer. But I continue to believe that AMAT is a buy. Why? The numbers support it, the demand supports it, and again, all of its partners are reporting huge revenue boosts, which suggests to me that this will also be reporting huge boosts. AMAT is essentially the company that builds the machines that build the chips, making it a very, very critical level of the supply chain here. Now, it's the backbone of semiconductor manufacturing. AMAT provides the advanced equipment and materials that companies like TSMC, Samsung, and Intel must use to produce chips. Without AMAT's machines, there's no chip supply. It's as simple as that. They're riding the AI and foundry expansion boom. Every new data center GPU, every 3 nanometer fab, every AI wafer build out directly boosts AMAT's order book. If you look at their numbers, if you look at their backlog, if you look at their order book overall, this company is an absolute monster. They profit as everyone else scales. And as the other companies are reporting their scaling, you're seeing this one scale as well. They've got explosive demand visibility. Orders and backlog remain near record highs as foundries invest hundreds of billions of dollars globally under the US, Japan, and EU chip incentive programs. Government government backing is a big thing here. Diversified dominance. AMAT isn't just about logic chips. It also leads in memory, display, and packaging equipment, giving it a balanced exposure across every major chip cycle. It's got strong financial momentum, free cash flow near record levels, margins expanding, and steady buybacks. Management keeps capital discipline while riding secular tailwinds, which we love to see, a masterclass in business management. You got valuation that's still appealing. I know it's at all-time highs, but it's trading well below NVIDIA-style multiples despite being an arms dealer to the entire semiconductor industry. And so the upside here, look, it remains very, very compelling. And then overall, the bull case, look, the global AI and chip fabrication race is accelerating. It's not decelerating. AMAT is sitting at the center. And this is a picks and shovels play on the world's most capital-intensive boom. And I think it's going to continue to age very, very well. Anyways, folks, that caps off today's video. Have a great rest of your day. Make sure to take advantage of our Halloween sale on ZipTrader Discord with that first link down below. We're going to be posting a ton of prep alerts and overall forecast this week, and you're not going to want to miss it. It's going to be a lot of stuff that we're going to be reflecting on later on in the YouTube videos, and you're going to be like, damn it, I wish I had seen that preparation. Because being prepared and having the right information and the right research and the alerts when timely is kind of like the main game of the stock market, right? So anyways, link down below, expires tomorrow night, that 25% off sale. Anyways, that caps off today's video. Have a great rest of your day. We'll see you next time.